Hello, one day is Thursday, April 25th, 2024. This is Week and Charts. I was going to thank all you guys and girls for attending tonight. I appreciate you taking time out of your busy schedules to be here. So, what we talk about? Well, obviously, current market conditions. I have a plethora of stuff to say about that. Your questions on trading, your favorite stock and crypto picks. I can't imagine you'll have that many crypto picks, but we'll give it a shot. In fact, this week, you'll notice I'm not going to talk about crypto at all. I have one position on that hasn't stopped out, and that's it. And I actually don't remember the last time I put on a crypto trade, but I do have to keep doing my analysis, and we're going to get to that in just 1 second. Why you need to do your analysis. I got a question on the depth of a pullback, so we'll talk about that. I want to update the TFM 10% system. We're back into green, and maybe talk about a little bit of some recent research I've been working on there. Trading the Ogre, have another live example this week, or a recent live example, I should say. And then, of course, Q&A. If you have a question, let me know. There's a disclaimer screen. As you know, you can lose money trading, or as I often like to sum it up, borrowing a line from my buddy Greg Morris. All predictions about the future, and a lot of stuff can happen between now and then. All right, a couple of weeks ago, I talked about trading the opening gap reversal with AG, and the same exact stock setup one more time. So let's take a look at what it looks like on a daily chart. There's the actual trades down there. We'll come back to those in 1 second. But the buy was here when it began to reverse. And then I had a 0.5 point initial profit target where I exited half of my shares. And then I had a late day exit. Might have been a 20 cents profit target on that, now that I think about it. Yeah, 20 cents profit target. And I actually exited a penny or two early. And I'll explain that in just 1 second. All right, let's take a look at a 5-minute chart. Now, I trade off a 30, which I'll show you in just 1 minute, but here's the 5-minute chart. Once again, those are the trades. My entry was at 640, so I waited for it to begin to rally a little bit. And like I said last week, and quite often, by going to a higher level chart accidentally, I found myself getting caught up in a lot less noise. In fact, when you're learning how to trade these ogre trades, you might actually want to go back to that daily chart like I just showed and trade them off of there, because the little zigs and zags get kind of crazy. I have, since I've moved to the longer term time frame, so to speak, charts, 30-minute charts, if ever I find myself on like a 5-minute chart, I write in my trading journal 5-minute warning, because that means something's wrong. I'm nervous about something. I'm either trying to get into something early. I'm trying to trade not to lose, meaning I want to go in. I'm not trying to make money. I'm just trying not to lose on a trade, which is a bad way of trading. And that's something I want to get into later tonight, but we ran out of time, or I ran out of time. So I'm going to cover that next week and what it means to be a trend following moron. But anyway, so the initial profit target in this case was 20 cents, and I only did 1,000 shares. Now, I did do this across multiple accounts, but I do like to show you on something that would probably be more manageable for somebody with a smaller account. So you should be able to do 1,000 shares. That's about $6,000 into the trade. Obviously, you don't want to lose that much, and with protective stops, you can keep the risk within $100 or so. But anyway, so exited half at a 20-cent gain. Now, if memory serves, in fact, looking at the trade, you can see it's a little bit shy of 20 cents. That's because it just seemed like it couldn't quite get to that IPT. It was within a cent or so, and I figured it was close enough. And as soon as I exited, of course, it kept on going, but at least I got my piece off, and then I'm free rolling on the remainder, and then I just trailed the stop. And you could see it died out. And late in the day, one of you guys pointed out, I think it was Travis, pointed out, it looks like walking a dog and he's trying to figure out where he wants to leave his mess. And that's kind of what the stock did. It just died out really quickly. So all the excitement was very early in the morning, but I tried to hold on as long as possible. And about 10 minutes before the close, I went ahead and just bailed on that. So 90 bucks on the first loaf was supposed to be 100, but close enough for government work. 75 on the remainder, that's 165. You know, it's not a huge amount of money, but it's better than the poke in the eye. It's $40,000, $41,000 and change, but who's counting? If you were able to do that every day. Now, I know that's hypothetical, but the point I'm trying to make is even if it's a small amount of money, you can go in and pick up with these ogre trades at a relatively low risk, then I think it's worth a shot. Now, By the way, your best ones, you want to have the daily chart set up. If you go back a couple of slides, notice that the daily itself was set up as a pullback, and you look to trade the opening gap reversal within that pullback. So here's the 30-minute chart, which I'm actually watching, or what I use now. So my buy was there. I let it kind of do its morning opening gyrations. There's no fixed amount, there's no set amount, but ideally, if they gap open and rally a little bit and then implode a little bit and then rally and implode and do that little shenanigans a few times and fake you out or fake everyone else out a few times, then you kind of feel like the hook is in, especially if it has a mediocre rally, a sharp sell-off, and then all of a sudden begins to rally again, because that knocks out some nervous Nellies, and it also sucks in some more shorts probably, and then when the market begins to reverse, you take advantage of the predicament of those traders. So that was the buy. And again, the IPT was up here. I got out at 658, and I was looking for 660 to make $100 on the first loaf, and then trailer stop. And unfortunately, it didn't set the world on fire in the second loaf, but at least I made a little bit. And again, better than a poke in the eye. Sometimes you get into these opening gap reversals, you make a little bit on the first loaf, you get your IPT off, and the worst you could do is break even, barring a halt, I suppose. And sometimes they really take off, and sometimes they'll go back in black for the day and beyond, and then you exit on a close, and you're looking pretty darn good. But anyway, I exited close to the close on this, about 10 minutes before the close. All right, any questions on opening gap reversals? One thing I'd recommend you do, if you're on my YouTube channel, which is Dave Landry, which is youtube.com/Dave Landry, go to my quick clips, and I have quite a few ogre trades there. And every time I get a new one, I make sure I add it to the quick clip, so you can get a good idea of how it works there. Also, the TFM 10% system, which we're going to talk about right now, I also have quite a few videos there. So everything is fully disclosed is what I'm trying to say. So anyway, the TFM 10% system, we're back into the green zone. Jeff, who's here tonight, pointed out that markets tend to get in trouble once they're more than 5% away from the 50-week closing high. The TFM 10% system says if you're 10% or more away from the 50-week closing high and you close below the 50-week simple moving average, you need to exit the market. That's the whole sell signal in and of itself. And then Jeff said, once it's about 5% away, that's good enough for me. I did test that. I found that it has a little bit more whipsaw, or quite a bit more whipsaw, but it does get you out a little earlier. That's trading. Everything's a trade-off in trading. What I did also do last week, and you might want to check it out, and I did some rough calculations, is to determine what would happen if you just stayed long as you're in the green, and then you exit in the pink zone. And the results so far have been really promising in doing that. Your drawdowns are really low. I don't run sharp ratios and things like that, but I would imagine through my experience with those many, many years ago through a money management firm that the sharp ratios would be pretty good, because your drawdowns are like 5 and 6 and 7%. Am I still holding half my shares of AG? No, that was a day trade. So that's a good question. The opening gap reversal is a day trade. You can use it to get a head start on a longer term trade, but I would just keep a small amount of shares on if you're doing that. And if you really wanted the stock and you really like the daily setup, then by all means use that as a head start to get in it. But in this particular case, and the last time I traded it, which I think was 2 weeks ago for the opening gap reversal, in both of those cases, they were day trades. And as a general statement, the opening gap reversal is a day trade. And again, you want the daily chart to be set up. You want the daily pullback to be set up when you're looking to play that opening gap reversal. Anyway, so one thing I've been noodling with, inspired by Jeff, is what would happen if you stay long again, if you're just in the green zone, exiting the pink zone. And this morning I woke up thinking, what if you started a count where if you hit the pink zone, you say, okay, I need to be careful here. I might need to think about exiting this market, but then wait so many weeks and have a hard stop in place, or a hard exit, I should say, not an actual stop, but hard exit, where if it did close below 10%, like it did down here, and below the 50 simple weekly moving average, that is, then you have to exit, no questions asked. So this is just trying to kind of improve upon the system. If you go back in time and look at this, you will be pretty amazed. The market will dip into this pink zone, and sometimes even the red zone, and the red zone's above the, or the top of the red zone at least, is above the 50-week simple, and you'll ride out some pretty, I wouldn't say ugly corrections, about 10% corrections, and then the market keeps on going with a bit of a count in place. So it's something I haven't fleshed out. I've been talking about it a little bit with my peeps today in the Facebook group. So if you're in the group, you can check that out. So one thing inspired by Jeff, I got to thinking, is like, I put these zones in here, and the green zone is kind of a don't worry, be happy zone. And we did dip last Friday into that pink zone. And then today we bounced right back out, or this week, I should say, so far, even with today's bit of a, what felt like a debacle, but it was kind of an opening gap reversal. The market really didn't do too bad, all things considered. And then obviously, if you're 10% or more away from the 50-week closing high, that's when you need to think about getting out of the market, especially, again, if you're also below that 50-week moving average. So the sell for this would be if we take out 40.34 on a closing basis. So, and by the way, this system, I get this question fairly often. This system was initially designed on a calendar basis. So on a Friday, that's when your signals would be complete. So last Friday, we closed in the pink zone. Remember, we have to close in the red zone and below the 50 simple for it to be a sell. So longer term, and I don't want to get too excited unless let's start kissing each other just yet, but longer term, the market still looks okay. Shorter term, there's a lot of problems, and we're going to flesh those out in a few minutes. But I just wanted to show you where we were on that. And thanks to Jeff and the rest of you guys that are following along with the system in Facebook and keeping me on my toes with this stuff, because I wasn't aware where we were last Friday when you guys had brought it up. Okay, real quick, I did receive this letter. I've been watching your videos on YouTube, and more than one time when I look at the charts, you said that you would like a bit deeper pullback. That's probably when somebody's asking about what stocks to trade. Why is that? Does a shallow pullback means there are no sellers? That is good for longs because no selling pressure. Or do you want a deeper pullback so that it will knock stops and weak hands and will sell, and maybe even somebody short selling, create a possible short squeeze scenario in the future? Yes. I have been buying shallow pullbacks because these pullbacks are scary to buy. I don't think a deep pullback is scarier to buy. If anything, I'd be more comfortable buying a deeper pullback. Anyway, I said, I think you might answer your own question. A pullback needs to be deep enough to knock some players out and attract eager shorts. A deeper pullback within reason, and I said, see the slide below. I have the slide, a couple of slides below that I added in. Helps to ensure that and gives more of a reversion to the mean play back in the direction of the major trend. So the further that rubber band is stretched to the downside, the bigger the pop possibly, and the faster the pop, the market can come right back, kind of like a ball in the water is what we're hoping for, okay? Now, if the overall market is in a solid trend and has shallow pullbacks, like if we get in a rip roaring bull market, just have like these little bear flags, bull flags along the way, hopefully that wasn't a Freudian slip, then by all means, you could trade more shallow pullbacks. I tend to match the pattern to the market. So right now, the market's beginning to roll over a bit. A lot of sectors are rolling over. A lot of sectors are making bow ties. So you'll notice that I'm starting to talk about shorts, and I recommended my first short today, KBH, as a bow tie to the downside. I don't want to go off on too much of a tangent, but you're probably not going to get rich on the short side. I need to watch the way I say that because I don't want to set myself up for failure. But it's very tough to make money on the short side. It seems easy when you first look at it, like, oh, I could make money if stocks go down. Well, shoot, sign me up. But it's a little tougher than it looks. But anyway, with a deep pullback, there's a chance that it'll just keep on pulling back. And maybe that's the scary part for him. You're not catching that falling knife like we talked about last week you're waiting for the market to begin to go back up. And if it gets stretched again to the downside, the chances of a pop back up are much better. So hopefully that answers his question. So if we were just taking the slide from trading full circle, when you're looking at the pullback, there's quite a few things you want to look for. And then the depth must be deep enough, again, to have knocked some players out, but not a bona fide reversal, okay? So if you have a pullback that retraces 100% of the last trend, then obviously it's no longer a pullback. Or if it pulls back all the way to a base, it's no longer a pullback. But if you're in a really solid trend, or even an IPO that kind of just goes straight up and then comes back and has a deep pullback, then by all means, that's okay. And then, you know, if you think about like the trend knockouts, that's a 1-bar pullback pattern, or it can be a 1-bar pullback pattern. And when you're looking at that, ask yourself, hey, if I was long this market, would that move have knocked me out? And that's a good question to ask yourself in general for whether or not a pullback is deep enough. But anyway, like I said last week at Bandcamp, you were looking for that reversion to the mean again within the established trend. And because we can only predict so far out as a trend following Moron, the chances of that happening, that bounce, is a lot better than the longer term trend. I put the word fairly certain in there. Sometimes it doesn't seem very certain at all. Hey, if you're liking this video, do me a favor, and you're on YouTube, like it. And if you're watching it recording on YouTube later, then like it. If you don't like it, then go have no fun somewhere else. I'm half kidding. Also subscribe. It helps me to bring more and more content. As the channel grows, I'm able to bring more and more content, and YouTube will show it to more and more people based on their algorithm. All right, let's continue the series on, wait, before we go any further, any questions on anything thus far? All right, then let's continue, he tried to say, the series on what it means to be a trend following moron. We're now on part 4. Now, there's only one way when you boil it all down, and I do a lot of that in more recent years, like boil it all down. Let's reduce this down. Let's simplify it. What are we trying to accomplish? We're trying to make money, okay? Well, the only way to make money is for a greater fool to come along and buy the stock higher from you than where you bought it, okay? And you need to wrap your head around that and only think about that before you put on your next trade. And of course, you want to make sure, a few things I kind of glossed over a second ago, that the trend is really strong, it's persistent, it's accelerating, the stock is clean or trades cleanly, it doesn't look like electrocardiogram, and of course, acceleration and all those other good things. And of course, you also will make sure that pullback is deep enough to have knocked some players out and attracted some shorts, or something like the TKO. Like I said last week, the only way to ever profit from a trade is to sell higher than you buy it. And the person who buys it from you is the greater fool. So if you boil it all down again, we're greater fool hunters, okay? That's our whole mission in this trading life. Forget about the Fibonacci and the counting of the waves and the situation in Nigeria. Cross between Arnold and who's that? Henry Kissinger. So there's only 2 questions you need to ask, or need to be answered, I should say, before placing a trade. Is there a greater fool? And remember that sometimes you are the greater fool. So am I the greater fool? And yeah, believe me, many times I am the greater fool. Now, a couple of more important questions, I threw this in last minute, is before you put on any trade, why would someone be selling me this stock? I have a brother-in-law named Andy, and he tends to, we call it Andy, he tends to Andy you a lot. He'll ask you opinion on something, and when you go to tell him, he'll tell you how wrong you are, and he'll tell you what his opinion is. So anyway, his father must have maybe Andy gets it honestly, but my mother-in-law has asked me periodically, tell me when you think gold's looking good, I'll buy some. I was like, all right. So a while back, not now, like now, but like now, the gold was hitting some brand new highs. It was looking pretty good. So they came over from for dinner, and I'm like, now's a good time to buy gold. Where should I buy it? And I gave him a few websites and such or whatever, and I'd helped him buy before, so wasn't a big deal or whatever. And then he started to berate me. My father-in-law was like, "Why would they be selling it to you?" I'm like, "Because they make a profit. You sold the profitable business many years ago. You should understand how inventory and profit margins and all of that stuff goes." And I was thinking to myself, and but he kept kind of badgering me, like, "Why would they be selling it to you?" It's like, okay, well, why would they be selling it to you? If you listen to all these commercials on the radio, and that's probably what he's talking about, is all this fear mongering. They tell you about how much higher gold's going to go. It's like, well, why would they be selling it to you? Well, they obviously don't believe what they say, or they're stupid, or they need a more convincing argument. And the other question you need to ask yourself is, why would someone pay me more in the future than it's worth now? So will those greater fools, so to speak, come along? I think I did day trades. I think after it was all said and done, I don't think I made much money, if any, in the what was that GameStop thing? But it was a fun ride. I mean, it was up. I'd be up 8,000 and down 7,000 and up 2,000 and down 3,000, and even on a small share size. But my thinking on these days when it was going crazy was, these people are so stupid to buy it at these higher levels. I'm going to buy it and sell it to them. And that was a bit of a fiasco, but that's another story altogether. And I think overall it wasn't worth the mental anguish. But you need to ask yourself, why would someone pay me more in the future than it's worth now? And you don't want to confuse the issue with facts. Whatever the current bid of a stock is, that's its current value if you're looking to sell it. And the price of the stock is the ask if you're looking to buy it. You can't justify or whatever. Yes, you might have some setup where you think that if this setup triggers, it could suck some people in because they just got knocked out in a trend knockout, or the shorts just got sucked in, and maybe that'll cause some buying. But the bottom line is, you have to accept what is, and then always think in terms of the greater fool. Now, there's a lot of harsh realities that the TFM must accept and embrace when it comes to trend trading. And this is kind of dovetails in, or completely overlays for that matter, presentations that I've done here and there about trend following, about you're going to be wrong a lot. And even when you're right, and go back a few episodes of Week of Charts, you'll see that even on a really good trade, you spend a lot of time under and less wealthy, so to speak. So that's one of the hard realities of being a trend following moron, or just being a trend follower if you don't want to be a trend following moron. I like being a trend following moron because whenever I try to outsmart the market or do something stupid, like trading not to lose, and that's something that I wanted to get into tonight, but we'll have to pick it up some other date, maybe next week. Trading not to lose is like, oh, okay, I could go in and just risk $100. Who cares? If I lose, I just sweep it under the rug. And you're probably gonna lose more than 100, and you're probably almost guaranteed to lose at least that 100 and probably more. I'm trying to say it. So you got to be really careful not to go in and say, oh, I don't have a lot of risk here, so I'm gonna take a trade. You only want to trade when the odds are really stacked in your favor. But anyway, I said I was going to get into that next week. I just pretty much explained the whole thing to you. But I'll draw some charts up for you. But you must be present to win in trading. And I've told the story many times, and it's more than one individual. So I think it's one person that thinks I'm picking on him. But I've told it to more than one individual. But I remember one email that I received from somebody, and it says, I don't see anything setting up in the foreseeable future. So I'm going to stick with you, Dave. I'm going to stay with the service, but I'm going to go off and have a vacation. I'm going to have some fun, and I'm not going to even think about the markets. I'm like, okay. And then the next day we found two setups, and I'm trying to figure out what they were, but there were two setups. I keep thinking one was CNX that really took off literally the next day. And, unfortunately, you probably was thinking WTF. And that's just kind of the perverse nature of the markets. It's like right when you give up is when the market takes off. It's like the market will grind you down and make you give up. And then right about the time you give up is when it takes off. And as I've said before, it's weird because it's one of these paradoxes, and that's something else I've been working on forever, is paradoxes of trading. One of the paradoxes is that, again, as soon as you stop doing your analysis, as soon as, let's say you're following a system, and as soon as you give up on that system, the system begins to work again. And then a lot of times people will end up perpetually out of phase. And so that's the paradox, is that you feel like Einstein's definition of insanity, doing the same thing over and over again, expecting a different outcome. And the paradox is sometimes you have to do that, provided you have a viable system. And it's more like Churchill's definition of success is moving from failure to failure without any loss of enthusiasm. So you have to work those two out, and it is a bit of a paradox. Anyway, I remember, I think it was this trade. It could have been another one, but I'm pretty sure it was this one. And I remember coming in every day, placing orders, placing orders, placing orders, placing orders, placing orders. And then one day, I just was thinking, especially since I had closed poorly the day before, and I was just thinking, you know what? I'm not going to bother placing an order. This thing will probably never trigger. And a market is kind of perverse like that, and it'll wear you down. And fortunately, one of you guys in Facebook, and I don't remember who it was, but you pointed out that the stock had triggered from the trading service. And I'm like, oh crap. And it was only a few cents higher than where I had intended to get in. So luckily I was able to get in. It did not take off without me. So that's again, you have to be prudent, and you have to be patient, and you have to be present. Oh, I need to write that down. Prudent, patient, and present. Easy for me to say. Now, when the market slides, the overall market, and this is a little bit more related to the overall trend following in the overall market timing. But when the market slides, it comes right back in, you're going to look like an idiot. And by the way, if you don't have the occasional bear markets, then market timing does not work. So you need bad markets for market timing to work. The market needs a 50% haircut every now and then, and it will have a 50% haircut every now and then. That's one of the things I can guarantee. And one of the things I wanted to mention earlier, somebody on Twitter pointed out, and I back tested it, and it's fairly high, not quite as high as they thought it was initially, because they must have been looking at a smaller subset of data. But once a market drops 10% and triggers that TFM 10% sell signal with the 50 simple moving average, there's a 60% chance, and I think again it's more like 58 or 57.5. Don't quote me on that, but there's a roughly 60% round number chance that market will drop another 10%. So I thought that was kind of interesting, and that's a very good what's the word for it? Very good reason, I guess, for lack of a better word, to follow a market timing system or use some sort of market timing system. Now, what's interesting is friends and family never ask me about the market when it's doing well. They always wait until, like I said, after the bomb blows up. They always wait until the market's down 30% and they're freaking out, and they ask me what to do. I'm like, well, the bomb's already blown up. You know, we had a sell signal 6 months ago, you know, and it puts me in a interesting position. But it's like anytime I try to be a little proactive with them when the market gets hit really hard, and I say, look, I'm getting some sell signals here, guys, you might want to pay attention. It's like all of a sudden they defend their guy to me. So it's kind of damned if I do and damned if I don't. I just keep my mouth shut. I let them, you know, just wait until it goes down 30% and they ask me what the hell to do. But they always defend things like, my guy has made me 60% in the last 5 years. And then when you have like a V-shaped recovery like this, people are like, oh man, I'm glad I held on. I wish I'd have bought more. Well, in hindsight, yeah, but I know some of these people, and not one in particular, but I know one in particular, and I'm not sure what he did. That's what I'm saying. It's like I'm not sure how he played out, but I know one in particular because he stayed with me, and this was during that pandemic slide, and he wasn't sleeping at night, and he wasn't too keen on much at that time, because he was watching his profits evaporate, and he was hoping to retire. He's just retired recently. He was hoping to retire within the next couple of years. So the V-shaped recoveries will make you look like an idiot if you are prudent. So that's another thing you have to accept as a trend following moron. And my friend who was bragging about his guy made him 60% without looking at the market and without even knowing, my immediate comeback was the market made you 60%. I don't think your guy made you 60%. And it was interesting, after that statement, I looked everything up. I think it was earlier this year, and I was shocked to see the market was up 107%. I didn't realize it was up 107%. So his buy and hold guy made him 60%, and my buddy's happy, but he could have done a little bit better, maybe just indexing. But that's a story for another day. The point is, when the market comes back, and if you don't have serious sell-offs, then buy and hold actually works, and it'll make you look stupid for trying to time the market. But again, just to beat the dead horse a little bit more, when you're out of the market right here and you watch that market drop another 20 or 30%, that's a great place to be. Must be getting ready to take off. I'm about ready to call it quits. Hang in there, John. You know, that's the thing too. You know, you're always one trade away, and it comes back to the definition of insanity, and then Einstein, what is it, Churchill's definition of success. You know, but yeah, it's like right when you think you're about, you know, it's like as traders, we go through this trader's journey over and over again. You know, it's a hero's journey, trader's journey, kind of the same thing. And it's like we have these all is lost moments fairly often, more often than we probably should, right? And then one trade, bam, you knock it out the park and you're back. You know, what's his Mortimer? We're back, Mortimer. Mortimer, we're back. Buy and hold often wins, or buy and hope often wins enough for the asset gatherers. Oops, I'm sorry, I mean financial advisors. I use that term loosely, because his guy could have just indexed and done a little bit better than 60%. He could have done almost twice as well. But anyway, these guys can have a fairly long career. And I actually got the word asset gatherer from one or two ex-brokers who came to me to learn technical analysis. And they got into the business like I think everyone, like, oh, what are you going to do? Well, I'm going to become a broker and that'll make me a trader. And it's like they soon find out that it's not really like that. It's just like you're following the formula for the Kool-Aid or whatever. But buy and hold can work for a long time and make people look really, really smart and make a trend following moron look like just a moron. All right, any questions on all that pontification? All right, let's shift gears and go over to crypto. Again, I can't imagine we'd have a lot of setups right now, but now's the time. And see, what am I doing? I'm kind of giving up on crypto. Well, I need to take my own advice. And now's the time where I need to really pay attention to what's happening in crypto, right? This one was mentioned last week in the week of charts, and I don't remember, it's down here somewhere, and we were looking at it, and I thought what you guys pointed out looked pretty good. And I'm not sure if you got the initial profit target out or not. I didn't take the trade on that one, but it's looking pretty good. The only one I have left is this arrow, and we're getting close to stopping out on this one. I don't have a stop in mind, but I was thinking that if it takes out today's low, that would probably be a decent exit. And this one ran, I think, 300%, and we made 100%, and then it ran another 100%. So pretty happy with that. Let's take a look at Bitcoin. Bitcoin is kind of chopping around in here, and it's a bit of a bummer. So it's kind of range bound. So I would not establish a new Bitcoin position at this juncture. Let it break out before getting too excited. Ethereum is not looking so hot either. Ethereum's looking worse than Bitcoin. If you look at Bitcoin versus Ethereum versus Bitcoin, I should say, you could see it's in a pretty serious downtrend. You could almost short that, or I guess you just you short that to play that move lower. Anyway, Ethereum not doing so hot. So as I've said before, if we're in a rip-roaring bull market of crypto, which could happen next week because these cycles are pretty short, we were in about a 2 to 3 week cycle, a bit of a bear market in between, a bull market, and then those cycles seem to have lengthened. And I really haven't found much, or should say anything, to trade lately. But sometimes you can just go in here and look for the strongest pairs. You need to look to see, obviously, if they have long tails. That would suggest they're kind of thin. So this would probably be a little dangerous, but this would be something I'd be interested in if they were all running right now and if Bitcoin was doing really well. When Bitcoin does really well, these shit coins, SHYT coins, can really, really take off. But anyway, I'm not seeing anything here worthwhile. If there's something you guys want me to take a look at, I'll be happy to do so. All right. All right, let's go ahead and shift gears and get into stocks. And if you guys want me to look at individual stocks, start letting me know now. Just type the symbols in, and I'll be happy to take a look at them for you. Let's get the bow ties in here, and let's take a look at the major MIGs. So first of all, let's take a look at the Ps. S&P 500, nice little opening gap reversal day today. It wasn't really cut and dry, but it was decent. And what did I play? Anything worthwhile? Soxel did really well, and SPXL did okay. XSP, I think I ended up scratching out on that one in the 0 DTEs. That's a tough game, by the way. I'm trying to figure it out. If I figure it out, I'll let you know. Anyway, it's a tough way to trade. It seems like you lose, knock it out the park, lose. It kind of sounds familiar, huh? Anyway, S&P 500, let's take a look at the spiders. You can see opening gap reversal there. Let's take a look at a 15-minute chart. So you can see it found its low fairly quickly. It took a while to get going, but eventually it did kind of get into gear. I think I got long Soxel, stopped out, and then hopped in one more time on that. I'm not a huge fan of day trading, but I'm here all day, and sometimes I'll see an opening gap reversal like that AG, which was, I guess, day before yesterday. I forget exactly when, whatever the screenshot is. Or when the overall markets make an opening gap reversal like today, I'll go in and step in and make a little, make some trades and sometimes do okay. Anyway, opening gap reversal in the Ps. I would have loved to see him go positive on the day. That would have shaken out a lot of people. Now, the good news is, and I had some 0 DTE E-mini options expire worthless, and then 2 minutes after the close, or 1 minute after the close, or 10 seconds after the close, the futures jumped about 20, 30 points. I don't know where they are now, but that would have put us back in the black for the day. And that's what I was kind of hoping for. I know, hoping one hand, and you know the rest. But S&Ps have bow tied to the downside. I suppose technically today would have been the trigger, but I would not have gone short on that opening gap reversal. So let's just say if we take out today's low, the market is no bueno, okay? Let's take a look at the NASDAQ composite. Opening gap reversal there, a little bit cleaner than I shorted the SQQQ. That's the other thing I did. I didn't make a fortune on it, but I shorted the SQQQ because you had this nice little opening gap reversal there. And that worked out. It was a bumpy ride, though. I don't make it sound like it was straight down, but it was kind of a bumpy ride. But it did work its way lower. It's so funny. At the end of the day, these things look so damn obvious. It's like, well, all you have to do is just short it and hold on. You know, isn't that crazy? And you know, when I talk like this and tell you what my feelings and thoughts are, and how it wasn't that easy to hold on, I want you to know that we all go through this mental masturbation, for lack of a better word, but This thing where we question ourselves that it's hard to hold on and follow those trends, even if it's an intraday trend. Let's take a look at the Rusty real quick. Rusty 2000s looks like it's rolled over in here. I wouldn't get too excited about the short side there though, unless it took out today's low. I almost said until, but let's hope that doesn't happen until. What else? Gold, the commodity, is doing pretty good in here. So these guys on the radio, these idiots in the radio, they're finally right. But then why would they be selling it to you if it's going higher? I don't know. Gold stocks, nice little rally today. So far so good. And gold, a lot of areas though looking questionable, as you would imagine. Software is rolled over in here, bow tied to the downside. A little bit of an opening gap reversal. So in this morning's market in a minute, I said that we're at an inflection point. And what I meant by that was if we had a decent rally, like a 1% rally, put us back above these moving averages, and we may have dodged a bullet. If we begin to roll over and drop 1%, then the market could be in trouble. And so we had a little bit of both today, but follow through to the upside will be key. But as you go through these sectors, a lot of sectors looking questionable at best. There's the drugs. You can see they bow tie to the downside. Potential new leg could be happening there fairly soon, unless we, of course, we have the mother of all rallies. Retail and other ones areas kind of rolled over in here. And it made back some of its losses, but obviously not all of them. Now, semiconductors have been a bit of a bummer, but I really like today's action. So we have a bow tie to the downside. Technically, the trigger would have been around the open today. I would not have shorted into this open though. And then it had a decent rally today. Nice little bounce, at least intraday. And that's 2%. So that's pretty encouraging. You can see it took out the 10 simple, and then it's not too far away from getting back above that 50. So there's this word that we have to be careful of, but let's hope it does that, okay? I sure would like to dodge a bullet there. Bonds have been kind of ugly in here. Choppy downtrend remains intact. Bonds down, rates up. You know how that works. Home builders, we shorted KBH today as a possible, as our first short for this potential little rollover we're having in the sector and the overall market. I hate to say this, but a lot of times it's like I'm perfectly okay with getting stopped out of my shorts and having my longs go crazy on the upside. Okay, that's fine with me. I would prefer if I didn't have to short, but I used to race sailboats years ago, and the sailmaker who lives right around the corner is David Bolyard, and he's known for his light air tactics. So if he's on your boat and the air is light, and normally when the air gets light, you know, get a Coke, get a beer, get a sandwich, get some chips or whatever, you start walking around the boat or whatever, take a leak, you know. But if he's on your boat, he quiets everybody down. He gets everybody where they should be, and he loves light air. And before you know it, he gets the boat moving, albeit slowly. If he could get the boat moving a half a knot or a quarter of a knot, I mean, sometimes it's so minuscule you can't even see it. But before you know it, you're 3 or 4 boat lengths ahead of your competition. So the point is, if you love light air, it'll love you. If you love the trend you're in, if you can't be in a trend you're in, how's that go? If you can't be in a trend you love the trend you're in. And that's why I don't want to knock the short side too much, but I also want to make sure, especially if you're newer to trading, if you've been around trading for a while, you're like, yeah, I get it, Dave. But if you're new to trading, don't rush out and short right away. Or if you do so, do it in a small way. In fact, what I did today, and I often do, is I buy in the money puts. So I bought in the money puts on KBH as opposed to outright shorting it. The great thing about that is, one, limited risk. You have to pay up a little bit, but hey, you know what? That's what you're paying for. You're paying for the risk. You know, you're paying to not have the risk. I should say. What's KBH trading at? KBH. I think I paid 3.5 for the option, so $350 versus $6,400. So you could see a lot less risk, but you know, a lot of moving parts with options. It gets kind of crazy fast. But on the short side, I always try to look at the deep in the money puts, and those weren't that deep in the money, and they actually, I found them fairly reasonable. But there's always a trade-off on that. Financials kind of interesting here. Financials actually got back above the 50. Now, I wouldn't call the all clear here. This still looks toppy, but things change really quickly when you get back above those bow tie moving averages and the 50 simple moving average. I think that's pretty much it with the market. Most sectors, excuse me, are looking fairly ugly. I'm encouraged by the action in the semis. Oh, energies look good too. Let's take a look at the energies. So commodity related areas like gold and energies still looking pretty good. So we might have some setups there. Shorts in most other areas. And again, I'm very encouraged by what happened to the semis today. I wouldn't say they're out of the woods. If you know classical technical analysis, you'll know that's an inverted cup and handle so far. Let's hope, and there's that word again, let's hope it gets negated by a decent rally. Okay, let me check in with my YouTube brethren, and then Keith, you're next on your stock pick. Okay, any questions on YouTube? No questions. Okay, fantastic. All right, Keith wants to know about GFI. Keep the stock picks coming. We're going to wrap things up in a little while. In general, I'm not a big fan of gap downs within setups, but sometimes that's going to happen within commodities, so that's okay. This one's super wide and loose. Let's take a look at like that AG. AG it's still kind of wide and loose. Don't get me wrong, but it's a little cleaner in that the way it took off, that it pulled back kind of deeply. Whereas the GFI, a little bit more electrocardiogram to it. I mean, it's okay. It's okay. And with gold stocks, you're going to have some chop to deal with. So I think that's pretty good. Golds may have gap or chop. Yeah. Okay. He answered his own question. Yeah, he pointed out that he's been coming through these webinars for 20-something years, so he knows. Yeah, gold does have a little more chop. You have to be a little bit more lenient. He took the words right out of my mouth. So yeah, that's a pretty good looking one. Maybe go through the other ones, and see if there's any. The one that's set up for today that didn't quite trigger, I'll show you next week. But that would be the mystery chart for this week if I'd have gotten around to doing it. But yeah, that one looks okay. I think you could maybe do slightly better on that though. So go through them all and see what you can find. All right, any more stock picks that you guys want me to take a look at? Going once, going twice. Let me give YouTube a second to catch up. They're a little behind. Okay, I want to thank everybody for attending tonight. I appreciate, again, you taking time out of your busy schedule. Anything you can answer, you can shoot me an email at david@davelandry.com. See the beginning of the video for all my other contact information. Follow me on Twitter, follow me on YouTube, and join me next week for the Week of Charts. I think most everybody here tonight's in my Facebook group, so I'll see you guys tomorrow. Everybody else will see you next week. So in the meantime, have a great weekend, and may the trend be with you. Thank you so much. You're welcome.